Hey everybody, what's up? We are back with another stock analysis, and today we'll be looking at NIO. So NIO is an electric car manufacturing company. Over the past couple of years, they have been getting destroyed in their stock price. Main goal of the video today is to see if there are financial improvements over that time. If there are, then this company could be in a fairly undervalued situation. If there aren't, then probably just not the best company to be in. But anyway, we're going to go through the financials primarily today, look at their earnings a little bit, as well as a bit about the company themselves. So if you're interested, make sure to subscribe, and let's get into NIO. Okay, so starting off with NIO today, I think most people know they do electric vehicles. They also do services for those vehicles as well, and some other things. Moving over here, 9.5 billion market cap at the moment. So this is still a fairly large company. 52-week range is pretty big. If we look at the current stock price, they're at 439, so they're on the lower end of that. The current target price is 574, so there's a little bit of upside expected there, which is pretty good. And anyway, moving on down here, you could see just based on their mini chart here, they have been declining since 2020 and haven't really seen a sustained uptrend since then. So not too great, but also could be a sign of maybe some possible upside happening in the near future. It's just a matter of can they kind of get some traction going here, I think is the best word to use for that. Looking at the growth summary, fairly positive. However, they are expecting to suffer short term, which is mostly fine, especially when it's a company like this that's probably not very mature, still developing a lot. So it's kind of to be expected, but the longer term estimates do look fairly positive, which is pretty good to see. Other than that, let's keep moving through here, starting off with the earnings. And hopefully we have some pretty good data to look through here once it loads up for me. But what we really want to see is just operational efficiency. Wow, 72% year over year deliveries reported in January. That is pretty good to see. Or in December, sorry, 37% year over year in January. So pretty good numbers we're already seeing. In February, up 62% year over year. And I'm sure in March, we're going to see another pretty big increase. But anyway, let's get into the metrics recap. So starting off, we don't have too much to go through here, unfortunately. This is in Chinese currency, by the way. Vehicle sales missed slightly, although the margin is significantly improved year over year. Other sales improved a little bit versus estimates, and gross margin also beat by just about 1%. So overall, they are beating in operational efficiency with their margins improving. They did fall short of their vehicle sales revenue, though, a little bit, but they improved the margin on that. So I'm sure they probably made more profit on that either way. But yeah, adjusted profit came in significantly above estimates at actually almost $500 million, a little more than $500 million above estimates. So fairly solid there. Let's see if we could find anything else to really go through. So, excuse me, full year financial results look fairly promising. So vehicle deliveries, 72,000 in the fourth quarter, consisting of 19,000 Onvo, smart electric vehicle brand Onvo. So they have two different, NIO and Onvo. Increase of 45% year over year and 17.5% quarter over quarter. So a lot of vehicles being delivered at a much faster rate, which is really good. Vehicle sales were 2.4 billion, 13% increase year over year, and a 4%, almost 5% increase quarter over quarter. Margin, again, was significantly increased. Overall, I think we're just going to see most of the same stuff we've been seeing. Will there be any guidance? That is a pretty big deal here. Again, financial highlights mostly went through those recent developments. So deliveries, with cumulative deliveries reaching almost 700,000 vehicles. I don't know how many vehicles Tesla produces, but I'm almost positive that that is significantly less. Now, obviously, I wouldn't say they're they should be compared directly to Tesla just because Tesla's a much more mature electric vehicle company compared to them. But I still think it should be mentioned that I believe their total vehicles delivered is significantly less than Tesla's. China strategic investment. Let's read through this a little bit. Injected 2.8 billion in cash into NIO China and 10 billion in cash. So $12.8 billion are being injected into their NIO China investment. I don't know the word for that. Developing into NIO China. They're investing 12.8 billion. So that is massive and will most likely be very, very good for the company. Also, they repurchased some of their debt, which is usually pretty good. That's a fairly solid thing to do. CEO comments, we achieved record delivery, maintained its position as a leader in China's EV market, captured a 40% market share. Wow, which is really solid. Overall, I'm not going to read through all the specific numbers here. New product cycle for the three brands. Keep moving through here. Fourth quarter, despite the Onvo L60 being in its early production, our gross margin reached 13%. So looks fairly solid for their future. New products, solid margins, increases in deliveries. Everything here looks pretty good. It really seems like, just if we go to the chart here really quick, it really seems like they just aren't getting a lot of attention. From what I understand, since 2021, they have seen massive developments, huge increases. Seems like profitability is going up, but they just aren't really getting the attention from investors. I don't know what more people really want other than these numbers, but let's go through. I'm just going to quick scroll through here looking for, oh, here we go, business outlook. So delivery to be 41 to 43, representing an increase of 36%. Okay, total revenues will be around 1.6 billion to 1.7 billion, representing an increase of 24% year over year. So not too bad. Very solid increases projected. So now let's look through the actual financial statements and see how they've really been performing over the past few years. Hoping for some solid growth here, and I'm imagining we will get that. So preliminary numbers for 2024, I believe those were actually much higher. I don't know why they're not updated here, but I believe I saw earlier on the snapshot that they were. Maybe not. Okay. Estimates for 2025, though, are very high at 13.4 billion compared to 9.1 for this year. So anyway, getting back into the income statement, let's go through this. So 9.1 billion, very solid sales increases every year. Cost of goods sold is also increasing very rapidly as well. So there might be a fall off in profitability here. I'm not sure. We'll have to look into the ratios in a little bit. But gross income is increasing massively every single year. Actually, not too much, but year over year, they did see a large increase there. SG&A expenses are looking consistent with sales, so nothing too concerning. Operating income is very negative and increasingly negative. Again, we'll have to look into the ratio estimates for that. So that'll probably be the biggest thing here, is looking into those ratios. And total shares are increasing a lot every year. They added 300 million more shares in 2024. So that is their primary way of bankrolling themselves, which could be a little concerning. That's definitely contributing to why their stock price is not really seeing any super meaningful growth. And if they continue that going forward, it's just going to stay like that, I'd imagine. But anyway, keep moving through here. Assets actually took a dip year over year, which for car companies, in my opinion, isn't really the greatest thing. I would say they want their assets to be continuously increasing. Now, most of this dip, it looks like, is from them spending about $1 billion in cash, which is understandable, but also they sold off a lot of long-term investments as well. So that could be a little concerning. They might be selling off some of their investments in order to continue to bankroll themselves, but overall, I don't think it'll be too bad. They have about $4.5 billion in debt at the moment and 5.7 in cash. So that situation is very positive. However, we did see they are selling off a lot of their own equity. So we will be getting into that in a moment. But that could be a little bit more concerning. I would honestly say debt might be a little bit more preferable than just selling off tons and tons of their equity. And it looks like we are not getting too much information for the cash flows, which is strange. Usually we do. Let's try the years and quarters, possibly. Will that make it work for me? And okay, no, it doesn't. So this happens sometimes with foreign companies, especially companies with China, where I don't get all of the information that I would like, which of course is going to happen here. And I really wanted to see their cash flows so we could see where or how much they're getting from selling their equity. Hopefully the use of cash will help us out with that a little bit. And no, it will not. Okay, so foreign company issue where we're not getting the complete data, at least through FactSet, unfortunately, but we still have the ratios to go through. So let's go through those now. So starting off with profitability, gross margin is seeing fairly decent numbers. They have seen higher margins in the past. Right now, they're just about in the average area of where they usually are. So nothing too shocking there. SGA is actually increasing as well, which isn't really too great. Operating margin, again, is kind of fairly high compared to what they normally see. Net margin, same thing. So overall, we're not really seeing the greatest improvements here. Keep moving through here. Debt to equity ratio is at 566%. So this is what I would say, this along with those other ratios is what I would say is probably the reason we haven't seen any real meaningful stock growth. Is there's no significant improvement with margins. Maybe year over year there is, but longer term, 2-3 years back, there's no real improvement. And that's just kind of continuing to be shown with this company. Usually with companies like automakers, you want to see every year they're getting more efficient with their operations. They're seeing significant growth in their margins, but here they're really not seeing that. And I feel like automotive is like a higher margin business, which actually let's compare their margins to Tesla's, just to see kind of what we're getting into here. So let's move over here and look at what Tesla's margins are. And okay, fairly positive. Obviously, they're not the highest, but even still, NIOs are much lower. Now, again, like I said earlier, NIO is a much less mature company than Tesla is, so you can't compare them too directly, but at the same time, same industry. They're both in electric vehicles, so it's kind of like Tesla's the gold standard for this industry, and NIO just isn't really holding up to that standard at all, in my opinion. Obviously, we did see some year-over-year growth, and that could mean some momentum going forward. But overall, I just don't really see the hard results that I would like to. So for that, I'm going to say this probably isn't the most promising company. At this valuation that they're at currently, which I believe was about $9.5 billion earlier, I would say it's a little attractive, but at the same time, might not be the best idea. I personally have a bit of a distrust for companies from China just because we don't get the most up-to-date financial results sometimes, and it's just a little bit more risky, especially being in the United States with the entire trade conflict going on at the moment. Definitely not the best thing to get into, in my opinion. Let me know what you guys think about the company. Tell me where I'm wrong. But other than that, that's all I have for NIO today. So thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.